All right, today we are diving into a new market report from Analytica Alpha. We're going to try and make sense of the current financial climate. There are so many confusing signals out there right now, so our goal here is to cut through all that noise, slide by slide, and figure out what's really going on. Let's get right into it. So, here's the big question on everyone's mind, right? Why does the market feel so contradictory? You've got some stocks just soaring while others are getting absolutely hammered. This report, well, it gives us a really solid framework for understanding that core tension. And a huge piece of the puzzle starts right here with the Federal Reserve. This quote from the report is so key. When you hear that Fed Chair Jerome Powell sounds hawkish, it basically means he's signaling a really tough stance on inflation, keeping interest rates higher for longer. And that puts some serious pressure on any company that relies on borrowing money to grow. All that pressure has created what the report calls a split personality market, and that's the perfect way to describe it. It's truly a tale of two different markets happening at the exact same time, and it looks a little something like this. This slide just lays it all out so clearly. On one side, you've got the giant mega-cap tech companies and all the AI-related stocks, and the enthusiasm there is just not quitting. But then on the other side, you have your smaller companies, your traditional growth stocks, and they are getting absolutely squeezed by those high interest rates. Now, here's where the numbers really back up that story. Just look at the data from a recent market close. The Russell 2000, that's your small cap stocks, it's down. The NASDAQ, which is super heavy on tech and growth, down even more. And semiconductors, they took a real hit, down 2%. But then notice the S&P/TSX Venture Index. It's actually up. That split we're talking about, it is very, very real. Okay, so if the big picture is kind of shaky, where are the bright spots? Where can you actually find strength? Well, the report zeroes in on some specific pockets where analysts are still seeing real opportunity. And here they are, biotech and resources. These two sectors are really standing out right now. And it's because they often march to the beat of their own drum. They're driven by unique things, like breakthrough drug trials or swings in commodity prices that are just less tied to what the Fed decides to do with interest rates. All right, so let's make this way more concrete. Let's look at some individual companies, right? These are stories right from the ticker that perfectly show you these bigger themes: the winners, the losers, and the interesting names you might want to keep an eye on. First up, let's talk about a big winner, Neumora Therapeutics. Wow, look at that. In a market like this one, a massive one-day pop of 17%, that is absolutely going to turn some heads. So what caused the surge? Well, it's a textbook example of that biotech strength we were just talking about. The stock shot up because of pure optimism around its specific therapies for CNS disorders. It's a story all about the company itself, and investors, well, they loved it. Okay, now let's flip the script and look at the other side of the coin. Here's a stock that had a really, really bad day. Robo.ai. Yeah, a brutal 21% drop in a single day. That just shows you how much risk is lurking out there right now. But here's the interesting part. The reason it tumbled had nothing to do with interest rates or the broader economy. It was all about the company itself. There were concerns coming out of a shareholder meeting about governance and the risk of watering down existing shares. And in a nervous market like this one, that kind of news can be absolutely punishing. So we've seen a winner, we've seen a loser. Now let's look at a stock that the analysts have put on their watch list for the future, Cibus Inc. So why is this one worth watching? Well, it checks a few really key boxes. First, it's a speculative biotech, which ties right back into that theme of a strong sector. Second, and this is a big one, there's been recent insider buying. That's a huge sign of confidence from people inside the company. And third, it has some big events or catalysts coming up, like field trial results and their earnings report on November 13th. These are the kinds of triggers that analysts are always looking for. Okay, so we've looked at the big picture, and we've drilled down into some specific stocks. Now let's zoom back out and give you the key signals the report says to watch going forward. Think of this as your very own analyst toolkit. So, after all that, what should a smart observer like you be looking for next? What are the clues that tell you where the market might be headed? The report boils it all down to these three key things. First, market breadth. Just think of it like participation. Are only a handful of mega stocks doing all the heavy lifting, or are lots and lots of different companies rising together? A healthy market has broad participation. Second, credit conditions. This is basically just how easy or hard is it for companies to borrow money. When credit is easy, it's like fuel for growth. And third, commodity trends. Watching the prices of raw materials like oil and copper can tell you so much about the real health of the global economy. If you watch these three things, you'll have a much deeper read on the market's true strength. And that really brings us to our final thought here. If there's one single takeaway from this whole breakdown, it's that the big headline numbers just don't tell the whole story. The report makes it crystal clear that beneath the surface, it's a complicated picture with winners and losers, strengths and weaknesses. So we'll leave you with this question to ponder. In a divided market just like this one, is the biggest risk of all just ignoring the details?